Welcome to Investors Insights. Our topic today, it's house, kids, and taxes. That seems to be a topic we're hearing from our clients on a regular basis as to how does housing impact my portfolio with the kids. Hey, there's some news here in relation to taxes. So we're going to talk about that. Today is Martin Luther King Day. The markets are closed. We will have a short week. But as you enjoy your holiday, we wanted to give you some information based on the questions from our clients that is going to impact them or that they need to know about in 2019. So on that note, Trey, talk about kids, taxes.
Definitely. Yeah, so the market is a pricing mechanism for future expectations, positive or negative. The market then prices that in. So something we feel like is not being priced in, and I think individuals, as they meet with their CPAs, their accountants, will realize is a positive part of the tax bill that passed in 2017 that people haven't been talking about. I've been talking about because I just had a son about 6 months ago. So
congratulations.
Thank you. It's a big focus of ours. Is that they increased the child tax credit to $2,000 per child. It's an $800 increase. That people have very likely forgotten about. And and I think Bobby and I can both attest to this, that if you have children, you don't save that $800. That's going straight out to the economy.
Yes, I can verify that, guys.
We think that this $800 credit, $800 additional credit that people aren't expecting is going to be a positive bump for consumer confidence as they meet with their accountant, and then a positive bump for spending as they receive those checks. And so that's something that isn't really being priced in, but as we see consumer confidence data roll out, as people meet with their CPAs, it's something we think is going to have a positive impact. I mean, if you take that $800, multiply it by the number of children, it's roughly 75 million in 2010 last census, that's $60+ billion in additional spending in a month.
Yeah.
That's a pretty big bump.
It adds up.
Yeah, it does.
Yeah, very much so. And with kids, you got to have a place to call home or possibly a house. And so in terms of housing, that's been a big topic and how it impacts or is an indicator to the economy. So talk about that. So we got tax revenues coming in due to kids, but talk about having a place to live with those kids.
Yeah, so recent weeks you've had some weakness in the housing reports. A lot of that has to do with the higher interest rates. So a lot of clients are asking, well, is the housing market going to be the cause of the next recession? Is my home price going to go down the next recession? And is the housing going to cause a downturn in the market? So what we want to do is kind of talk about the facts here.
Yeah, clients have been asking questions about that.
A lot. So in the past 5 recessions since 1980, 3 of the 5, the home prices actually went up. A lot of people don't know that. And the 2 recessions since 1980 where home prices went down. 1990, home prices only fell by 1%. And then in 2008, which we actually saw home prices decline, a lot of that had to do with because of the risky mortgage lending.
Absolutely.
So in short, no guarantees, but no, home prices don't exactly cause recessions or the downturn in the market.
Right, and if you've got kids and you got that home mortgage, you also want to know the company you're with is making money, right?
Yeah, absolutely.
So corporate earnings, we continue to monitor that as we're coming into first quarter of 2019, but seeing the earnings from fourth quarter of 2018. And Adam, you discussed that. Give us more information.
Yeah, and as we talked about in previous vlogs, even last week with consumer spending, that leads to earnings, company earnings. We're in the midst of earnings season right now. It's really important to keep an eye on this because the fourth quarter markets were down a lot. We're starting to see these earnings come out a little bit last week, along with this week.
Right.
We're getting really into it. So how is that reflecting? The markets were down so much, but now we're starting to see these earnings from these companies come out. So that's something we're really keeping an eye on.
Yeah, it'd be good to see was the market down because perceived weakness, and now we're getting good earnings. So it actually was there actual weakness in the fourth quarter? So
exactly.
I don't think that's built into the expectation. I think we're going to probably see positive.
Right, and on that note, because today is a holiday, it's a short week for trading, so sometimes you won't get really true numbers and understand in relation to the volatility what's going on until you get back into a full week because traders don't trade as much during the short weeks. So we're going to keep you updated. We hope you have a great holiday and appreciate your questions that you're sending to us. We want this to always be beneficial to you because we know you're taking time as you sit there in that coffee shop, your office, your home, as well as sharing it with others. You go, that was really important, and I know somebody else who would appreciate it, and you're forwarding it to them. So thank you for doing that. We hope you have a great rest of the week, and we'll look forward to keeping you updated. Thanks.